What is going on, investors? Back again. Time to take a look at the last major tech stock that reported earnings today, and that is Google, everybody's favorite search engine. We're going to take a look at the ticker symbol GOOG, but there's also GOOGL. I'll let you decide which one you want to invest in. I actually don't like it when these companies have these two different tickers, but it is what it is, and it's something you got to deal with. Now, the market cap here is at a little over $1 trillion. It's in that $1 trillion club, and the PE ratio is very similar to Facebook. Obviously Google and Facebook have the same customers in terms of the people that pay them for the most part. It's small businesses and advertisers and bigger businesses pay them to run ads. Now, their products are completely different between search engine and a social media site, but in general, the same type of customers, and they generate money in the same way. And so you can see Wall Street basically gives a similar PE ratio to both of them, right in that 30 range. And in my experience, it's about what you're going to pay for Google. Now, we'll jump into the most recent earnings report. Again, that got reported here today. And then we'll jump into the stock chart, see what we're seeing here. What's going on with Google? Maybe there's a level where we can buy this stock, maybe not. We'll get to that in just a second. So first things first, let's jump into the numbers here. Google's real simple to understand, just like Facebook. So we got our Google search up here. This is your Google search engine. We see it went from about 23.7 billion down to 21 billion. So that's about a 10% decline here in Google search. But again, it's a rough quarter. There's lots of businesses that are closed. There's lots of states that have been closed. On top of that, a big part of Google's business is like the airline and travel and hotel, and that kind of search traffic obviously has fallen off a cliff. And so I actually think this stock, as you can see in the after hours, trading relatively flat. It's actually mirroring what it did in the earlier session, the regular session of the stock market. So the market, I think Google gave the market exactly what it thought. I think if it had beat revenue on the top line like Facebook did, it would have shot up like Facebook stock did in the after hours. Google came more in line, and I think that's what people are expecting. If you saw a bigger decline here, maybe in the 20 or 30% range, I think definitely in the 30% range, this stock would have fell off a cliff, but it held steady because Google is still delivering on this top line despite the difficult environment. So you got YouTube ads here. That went from 3.6 to 3.8. Obviously, that's a positive trend as well. So you'd like to see that keep going. Obviously, a lot of people at home, a lot of people not working and things like that. They got more time to maybe be on YouTube. We'll see if that trend continues in the next quarters or so. So we've got Google properties went from 27 down to 25. Again, we'll call that a 10% drop. That's not great, but that's not bad given the environment. So we got Google Network members properties. So this is probably like AdSense and things like that. In fact, I contribute to these numbers as well. Those went down as well. Those are going to mirror what's going on here in Google search, since a lot of the advertisers here just choose to be represented here. So we've got a 32 point, call it 5 billion in the previous period. We went down to 29.9 billion. Again, not a big decline, but a growth stock like Google, you would like to see that trend in the other direction as soon as possible. Now, some positive stuff is we got this Google Cloud. It went from 2.1 billion all the way up to 3 billion, and this is almost as big as this business here and the YouTube business. So that's exciting. If that keeps growing at this pace, Google is basically going to maybe bolt on like maybe its second biggest business. And so right now it's like you could call it maybe the third biggest business, but pretty soon it might be the second biggest business is this Google Cloud business. So that's exciting for investors as well. Now you got Google Other here, which is non-advertising revenue on YouTube. That went up from 4 billion up to 5.1 billion. So that's exciting as well. Blended revenues here came in relatively flat. We went from 38.7 billion down to, call it, 38 billion. So when you take everything into account, including the growth in cloud and this other, about of a flat quarter for Google, and I think that's why you see the stock reacting where it is. It basically traded exactly where it was in the regular session. So this is a well-followed stock, so Wall Street's got it pegged pretty tightly here. So we got total revenues here. Again, very much in line with what investors were looking at. Let's take a look at the balance sheet, see if it's as nice as Facebook's. We took a look at Facebook stock earlier in the day. Their balance sheet has got to be one of the best I've ever seen in the stock market, and Google's is relatively similar. We got these marketable security here and these cash and cash equivalents. We went from 119 up to 121, so that's solid. They got $121 billion worth of cash. Let's take a look at the liability side. We do have a little bit of long-term debt, unlike Facebook, but it's totally manageable. It went from 4.5 down to 4 billion. Google doesn't really got a big reason to have a lot of debt. They don't got a lot of capital expenditures. They don't have a lot of stuff that they can do. Now, they certainly could. They could leverage this balance sheet and go acquire companies, but it's difficult. The CEO was on Capitol Hill yesterday getting grilled by lawmakers. So Google's got to tiptoe a little bit, and they got to be careful with what businesses they go into because they have the eye of the government on top of them. So we got $278 billion of assets balanced off by a measly $71 billion of liabilities. This is what I would call an absolute pristine balance sheet. Finally, really quickly on the statement of income here, we're taking a look. We've got more of our cost blended in here, and we can see here we come down to net income. So we got the quarter ended here 19 and 20. We went down from 10 billion down to 7 billion. So from a net income basis, we're trending down probably closer to 30% there. And as we see on the year to date, so close to 6 months here, we went from 16.6 billion down to we'll call that 14 billion. So a considerable decline in terms of net income, but I think investors are going to give Google a pass because it's a tough advertising business, especially in the travel and leisure space. Cash flows here, we're on the cash flow statement here. We pull down that net income number here, and then we bring it down here. We add some stuff in, and we get cash flows. Not too many investors really judge Google, and I think even Facebook, on cash flows because the cash flows are strong, and they're relatively consistent, as we can see here. It's more profits and then top line growth with Google. Now, finally, coming over to the stock chart. What the heck? Where's some spots where we can buy Google if we wanted to? Honestly, this chart doesn't set up as cleanly as, say, Amazon's or even Facebook's, which I had up earlier in the day. Looks somewhat similar to Facebook, but Facebook stock ticked all the way back up here, kind of restarting a new uptrend. Google's is still trading flat. In fact, it's about right here. And so it's kind of at the top of a range, or close to a top of a range, where it's been over the last several weeks here. Now, we had an uptrend. So this is the bottoming out in March. We had a nice defined uptrend for a while. This stock broke down here and kind of chopped around here, made a nice little rally. I think this is all-time high for Google back in February. So this stock is just kind of chopping around at this all-time high, and I think it's just waiting for a catalyst. Personally, I don't think there's a catalyst that's going to shoot Google down. I just don't see anything really as bad as it's been. Could it get worse? Certainly, but could it get much more worse than it is right now, at least in the United States? I don't think so. And so I think Google is probably going to chop around here. And that being said, I don't think there's a big negative catalyst to kind of break this trend and shoot this stock down, catch it back here down at these 1350 levels. I don't necessarily see that happening, but I also don't see a big uptrend to where we retest these highs back up in the we'll call it $1,590, almost $1,600 range. I don't see that either. So if you want to get in here and get Google, it's interesting. Google to me is like a proxy to the airline business, the hotel business coming back. And the airlines and the hotels, if you look at these guys' balance sheets, they're nowhere near as good as Google's and Facebook's. So these companies are going to benefit when travel comes back. They're going to benefit from the airlines getting back to business and the hotels and the cruise lines. So Google, it's kind of a sneaky back to normal trade, and especially when it comes to travel and leisure. So personally, I would avoid the Delta Airlines, the American Airlines, and the Carnival Cruise Lines because their balance sheets are just a freaking mess, and I think it's going to take a little while for those companies to recover. They're probably going to have to do a lot of discounting as well. Whereas Google's going to gobble up all their marketing budgets. When those companies come back, they're going to want to do marketing campaigns and say, we're back, and get in front of customers' faces and get those dollars flowing in, and Google's going to benefit. So I think that's the upside catalyst. When that comes, is your guess is as good as mine. I think this stock's going to trade sideways. Personally, I would look to get it down in this, call it 1480 range. And I would say even where we're at, 1550, maybe a little bit up higher here, 1560 is probably a top of a range. And if I bought it up here, I'd want to make sure that catalyst to growing revenues in the travel sector was around the corner. So we're talking probably at the end of December, somewhere in that time frame, when you got a vaccine and those types of things are being developed. Now, the stock trades down here to 1480. It's one that I might nibble at if I don't have a lot of other opportunities that I see in the market. Maybe Facebook gets run away and runs higher. Amazon's running higher. Apple's running higher. Google might trade sideways, and it might make it the outperformer next year when its positive businesses come back. So there we go. That's Google for you. Hopefully you guys enjoyed this video. I got tons of videos coming the rest of the week and the weekend. There's lots of stocks that were reported that I have not been able to get a video up. I'll try to do as many as I possibly can. If you like the content we're doing here on the channel, I want to thank everybody. I had like 1,000 subscribers a couple months ago. Now I'm close to 10,000 subscribers. This channel has grown tremendously, and it's all because of you, and I want to thank you for that. Maybe consider hitting that subscribe button if you haven't already, and that like button as well. It's much, much, much appreciated. We'll be back very soon with more videos. Good luck with your investments.